Really fantastic to get to talk to you once again. It's been a great week, and I trust that for all of us, it has been a great week as well. Now, what I want to just do is we start. I just want to share just my a little bit about my own a little bit about my own philosophy and my own approach to trading. Uh, Really, in a nutshell, the one thing I've said in virtually every presentation that we've had is you have to have a defined strategy, especially if you're going to be trading like we are doing here, the 5 minute time frame. Listen, on any time frame, you need to have your strategy clearly defined. The one thing that's out of utmost importance when you come to this time frame is to be clear about your risk parameters, your risk appetite. In other words, at what where are you comfortable trading? At what levels of risk are you comfortable trading? Because if things move against you, it could be a news announcement that you may not be aware of that might operate that might just kick in and you get stopped out. Now, it doesn't necessarily mean that your read of the market before that was wrong. It probably was not wrong, but that news kicked you out, stopped you out, because you always have to have a stop. So what do you do at that particular stage? Do you stop trading and sit back or close your laptop and then come back and say, oh my goodness, the market has continued to move in the direction that I'd initially anticipated that you would move? Well, you don't do that as long as you're within your risk parameters, as long as you are within the risk levels that you have set for yourself. You just must keep on trading. The reason I'm mentioning that is that I had a conversation with one of my colleagues, and it basically went like this. The market went in my direction. I said, "Oh, fantastic! If it went in your direction, then did you make money? By making money, did you make 0.25%, 0.1%, 1%? It really doesn't matter. But did you make money?" And the answer was no. I got stopped out earlier on, and because I got stopped out, I stopped trading. Now, I could not understand that, because the question I then asked is, well, what is your acceptable risk level for each day? They didn't have an acceptable risk level for each day. It was just a sense of a gut feel that, I've lost so much money and it's not working, so I'm stopping. And I'll keep trading if I continue to make money. Well, it shouldn't work that way, especially with any time frame, but especially the 5 minute time frame. So I have my own set risk parameters, and I know that I'm prepared to take those 4 out of 10 losses in a row, and I'm fine with that. I'm very fine with that, because that's where I'm trading. And if I have successive profits according to my strategy, that's fantastic still. But I am strict with myself, because I've got to try not to get emotional for this business. It's very easy to get emotional. When you get emotional, guess what happens when you come back the next day and look at the charts? I can assure you, you're going to say to yourself, well, hang on, if I stayed in, I would have made money. Anyway, be that as it may, today I'm going to talk to you about what happened on the 18th of March, where during the Asian session, I made 3.65% profits, and I'll show you where I took the trade. Now, by now, we should have a fair comfort level in terms of how I look at the charts each and every day. So here's what my chart looks like at the present moment, and I have discussed this with us before, and I'm just going to highlight it again because I think it's important just to continue to refresh this. The red horizontal line I have here is the low of yesterday. So these are things that I always mark on my chart before I trade any session. So this is from the previous day. The green horizontal level is the high of yesterday, and you can figure out why I use red and green. And the purple line, the magenta line, is the open of today, because I want to keep a view of those three levels throughout the day. Those are primary levels that I have to keep a view, because I'm trading intraday. And when I've zoomed into my chart, sometimes I do not get to see when the low of yesterday is coming, because that's a significant level of support, right, on the 5 minute. Or I don't see when the high of yesterday is coming into view. But if I have the lines marked, I can see it and I can anticipate whether to take profits, or if the market's going to react there. I'm not surprised by it. So I have marked this from yesterday, and I'm just going to do this on this time frame for those who are just coming into this particular session of mine. So you'd see this was yesterday on the USD CAD. This was yesterday. So there is a low and there is the high of it, and the magenta purple line would have been the open of the day. Now, any other levels that are important for me to note on the daily time frame or any of the higher time frames. So it could be on the weekly or on the monthly. I always mark it on this time frame, so that when I go down to my 5 minute time frame, I can actually see it coming into view. So I have this level marked here, the 1.224 88 level. And if I just go to the monthly, you can see that was the low of 2018. So that's a significant level I want to be aware of. Should we get there, then this double top level I have marked. So when these start to come into view, I'm going to expect that something will happen. So I won't be surprised by the market getting to that level of resistance or level of support down there. So just going back to the current time frame that we're actually trading. So that's what we currently have on this time frame now. I'm trading right now we are in the European session, the London session, whichever way you want to call it. And the first candle of the day was a bull candle. So I just marked it 5 minutes before. And I have a look at this, and right now I don't see anything that I want to readily trade. But things are forming that are of interest to me. And you can see there is a potential measured move, and we have spoken of measured moves to quite some length. The height of this trading range from the top to the bottom to the open, from the high to the open, market might want to do a measured move down here. So my interest, because I haven't seen anything I want to trade. Why haven't I seen anything I want to trade? I don't see any trend breakout. If I see a trend breakout, I would look for a test of the 10 moving average, or a double test of two-legged move test of the 20 EMA for me to trade. So I don't see that. So that's why I say for my particular strategies, there's nothing I would have wanted to trade here. You might say, well, why didn't you take that trade? Well, there is no breakout here. No breakout of anything. So that pullback for me is not anything that I'll take in a trade. So I've got to wait and see what's happening. We know the kind of mindset now that we have. So looking at the USD yen, low of yesterday, there is the high of yesterday. And again, just having a look at it, we've just come into the market here. I'm interested to see a few things from when a particular session opens. Do we have a trend that's forming right from the open, bull trend or bear trend? And that's obviously evident by breakout candles that you see. That if it's bull candles will follow through. If it's a bear trend from the beginning, of course, you'll see bear breakout with follow through. Or if you don't see a trend from the beginning, just have a look and see if you had a trend before the actual session opened. And if you had a trend, are we getting a pullback to the moving average that we can trade? Obviously, no trend here. Market is going up, but no strong trend that we would look for a pullback for. Pullback to trade, so nothing to trade. And if you don't get a trend from the open bull trend, bear trend, or a pullback, well, let's see what kind of pattern we have, because it usually creates some form of a breakout mode. In other words, there will be a trading range of some sort, and the market will want to break out of that. And the market breaks out of that, then obviously we look for confirmation of breakout. That's distinct breakout trend out of whatever range you're looking at, whatever pattern that's there, and they follow through. And if we get that, then voila, we wait for our pullback. So bit of waiting as well there. Put up one of our three pairs. There is the euro again. Same kind of thing. High of yesterday, low of yesterday. Significant level from the monthly that's there, that the market is kind of gone around. Have a look at that. Okay, so the level is there, looks a bit cluttered on the daily, but that level there, that's a deep blue on the 5 minute, is what was the current low of 2021. And the bears wanted a distinct break beneath that and follow through, confirmation of their strength to create a new low. And bulls, of course, would like just to defend that as a level of support, even though broken beneath it, bulls would like to turn the market. So you come back to that level, to the 5 minute. That's where the market kind of oscillated around that. So it's a significant level. I've just kept in there. And of course, if we start to go beneath that, then we take that off because now we'll have a confirmed new low of the day. Now, here's what's interesting. If you just have a quick look at what the market is showing us in front of us, market went down, market went up, came back to the low of yesterday, to the prior low of the year, holding beneath the open of the day. So this starts to create an interesting pattern for us, because that says to us, that says to me immediately, if we go from the high of this particular session, if you want to use that as the nearest one, or if we go to the previous lower high. But let's start with the high of this session, which is exactly at the old low of the year. The market comes down, the bears are strong enough and start to break out, give us a strong breakout beneath here. So if we get successive bear candles, so that's a double top, so lower high double top, but it is a double top, which is fantastic, because what I would want to see is bear strength. Successive bear candles breaking beneath the moving average would be fantastic. When I attempt to resume, then I get a lower high, then I'll be taking that trade. But on taking that trade, how far do you think it could go? If the bears are strong, the bears would like to have a measured move beneath this pattern that we have here. Beneath, it's a trading range of sorts. So this is how low that the bears would like to go. So to be worthwhile, just to keep an eye on this and see if we get a strong bear trend by closing beneath and moving average, maybe this candle or the next candle, then an attempt to resume, and we'll take it. The attempt to resume could be in the form of a lower high somewhere here, or if we have a strong bear candle closing beneath this moving average, we might just get an attempt to resume. That is a test of the 20 moving average, and then a 2-bar reversal of whatever. In which case, we need to take a trade beneath that reversal pattern. And if we do that, then our stop has to be, or a stop always has to be at a technical level. And the technical level is the nearest technical level that you can see on the chart. So wherever we take the trade, that's the place to put the first stop. If you want to be more conservative, then you can go above the open of the day, which would be above here somewhere, and put your stop there. So that's worthwhile to keep our eyes on and see what we get. Well, there's always a case for bulls and bears. So the question would be, George, what's the case for the bulls? If the bears fail to give us a close beneath the moving average, a strong trend candle, and the bulls reverse the pattern, well, you got to start to think, well, okay, it's the same kind of logic. If you're a bull, what would you like to see? If you're a bull, what you'd like to see is if we break above that high and have consecutive bull or strong bull, maybe it could be one strong bull trend that closes above this, and a follow through. If you're a bull, then you got to say to yourself, well, then I'm expecting at least to get a measured move to that height. So that still gives you fantastic opportunity to wait patiently for your pullback to the moving average, which will be a test of the breakout, and then take the trade with your stop at the right level and see if we get to that extent. So that's kind of what I put it. I've also put up the pound here, USD, GBP USD cable. And you see the cable and the euro, they're pretty positively correlated. But just to demonstrate the point, same kind of process that you have. There is yesterday's low. There is the high of yesterday's key levels identified from higher time frame that you must just keep your eye on. And again, having a look at this, nothing tradable. Nothing tradable according to the strategies that I'm trading. That's always important to bear in mind. You can scalp your way through the 5-minute time frame, and you can make money. Whenever you see the market, couple of trend bars, go short, see what happens, manage your trade, book candles. You can do that. But when I say nothing to trade, I'm talking about the 5 strategies that I trade in the market. So I just what I want to do is just have a look. Just go back to the 18th of March, and let's have a look at the trade that I made reference to. Now, the reason I'm doing that is I want to kind of show the how some of the things that we've spoken about are applied in a real market situation. So this is the let's start with the Canadian USD CAD. So I would have come in on this particular day. Remember what I've said before is that whenever I can, because of the time zone that I'm in, I'm in South Africa, and my time zone is a couple of hours off the UK time zone, and it's the preferred time to trade is of course the European session, but few times a week, 2-3 times a week, I get up early and I look for opportunities. And a good question to ask is which day? Which day do you choose to get up? Typically, I try and look at Tuesday, Wednesdays, and Thursdays. So I just avoid getting up on Monday morning. Just let the market open. But Monday morning, I am in the market for the European session, but not for the Asian session. Just my preference coming out of a weekend, I just don't like getting up on Monday morning. But you can, if it suits your time frame, the time when the market is a market, just get in there and have a look at it. So I would have gotten up around here at that time, and just to see what's happening in the market, the opportunities to trade. And what I would have noticed is when the market opens, there was nothing for me to jump in and trade into. But I saw this big black candle. I did not see the follow through. If I had seen a follow through candle of that, I always want to see that candle is breaking beneath this whole pattern here. So I always want to see a breakout candle breaking out of something distinct that I can see. Then I want to see the follow through. When I see the follow through, I then have a confirmed breakout. And when I have a confirmed breakout, then because I don't directly trade the breakout, which you can. If you're prepared to hold through pullbacks, you can trade the breakout quite easily. So when I talk of a breakout strategy, to me, all I'm saying is I'm going to wait for a pullback from that breakout. And when I get a pullback from the breakout, then I'll trade that particular pullback. So I didn't see the follow through, so there is no breakout. But then I'm interested to see what happens when we get to a measured move. Does the market turn, or does the market break beneath that and continue on? So when we got here, we had a breakout candle beneath that. But look at the follow through. The follow through had buy-in to the close. So those tails indicated to me that the bulls were strong. Follow through candle was an inside candle, and whenever I see an inside candle, it's a breakout mode. In other words, the market is setting out to break out. Typically, it would break out in the direction of the color of the candle. So the bulls and control here, the breakout would be in the direction of the candle. But as you might have heard me say so, but most breakouts fail. You might have heard other traders say so. Most breakouts fail. That's why if you want to trade a breakout, you have to have the mindset that is willing to hold through any pullback to see if your breakout resumes. So there was a breakout, and at the close of it, it failed, but then followed through by another bull candle. Okay, so when that breakout failed, if you were in the market at that particular stage and observing what was happening, you would have seen the bears try and reverse the whole breakout, but the bulls returned in strength and the market closed with a decent reversal candle. So if you'd wanted, you could have put an entry there, but I wanted just a little bit more action. So that would have been a valid trade to take, with your stop there. But I waited to see confirmation, additional confirmation, because I'm buying beneath the moving average. I wanted to get additional confirmation. So additional confirmation came with that candle, and I placed my order above that, and my stop is beneath here. And I'm trading a fraction of my full risk at that stage because I'm still beneath the moving average, and I'll wait to put in the rest of my risk when I get a second entry, typically now above the moving average, which I got with this 2-bar reversal here. So I put the rest of my order within there. So because I trade, my minimum is always 1%, but if I'm trading a trend reversal, this is a trend reversal because you start in the process on the other side of the moving average, and your risk is higher, you get stopped out more often. So you go in with 0.5% or 0.3%, and then you put the full risk there. But then the question always is, where do you take the profit now? Because I'm trading a reversal, I'm anticipating that the market will move. So at this stage, I want to be observing the market and waiting to see what happens before I decide to take my profits. So I had that candle, the descent entry candle, which I was happy with, and then the follow through, and I was anticipating, hoping for another bull candle for whatever scale, which if we got, then there would have been a pullback to the moving average, and the market would have carried on, give me an opportunity to tighten my stop. But instead, we started going sideways. And when we're going sideways, I had to rethink my whole thesis to say, okay, maybe I'm not going to get the bull breakout I'm looking for. Maybe all this is going to end up as is a lower high. And if it ends up as a lower high, it's going to give the bears an opportunity. So at that stage, I was trying to find ways to get out. Had I got a second bear candle after this, I would have gotten out, hopefully a break even on the first one and a little bit of profit there. But I had a bull resumption, but that bull resumption for me was not enough for me to stay in the trade, because essentially I'm now thinking I'm in a lower high. Why are we going sideways? Those are strong. This is not a pullback. I'll trade because I don't have a breakout. So I just closed the trade at that particular stage. And it was managed to get out with decent profit on that. So the rationale again was waiting, okay, for this measured move, because I didn't see any opportunity to trade here. I was not convinced that there was bear strength at this stage, breakouts sideways, and then to a measured move. So happy to take that reversal trade here, a small portion of my risk, then top it up here and hope to get the market moving up, and it didn't, so I got out. Later on, the market moved up, but at this stage, I'm out of the market, and I'm typically in for that first 2.5 of the Tokyo Stock Exchange. Thereafter, the family is waking up, kids gotta go to school and gotta exercise and all of those beautiful things. So, whatever happened here, I was not in the market at that stage. Let's just want to jump to the end, but before we do that, let's have a look at what's happening with the CAD. So currently, so not exactly the same kind of thing, but it kind of illustrates the point that I was mentioning. Okay, there is nothing to trade here, but we do have a trading range of sorts from this high to the open of the day. That's the earliest measured move that the market could get to. The market could try and you could put your measured move up to here and goes further, but I always want to see the first and earliest measured move. So I'm gonna keep my eyes on this and see what develops. Are we gonna get a double bottom somewhere in here? And if we do get a double bottom somewhere in here, are we going to get the bulls trying to break out and I'll reverse this off and go long? If it does, fantastic. There will be opportunities to take that trade. So nothing as yet at that. Let's just go through to the 18th of March on the yen, have a look at that, then we'll come back and have a look at what's happening here. Okay, so this was the 18th of March. As I said, I was in the session from the open. Okay. Now, here's an interesting thing. So, market went down, market went up. So that is a trading range. Why is that a trading range? Well, because we're back to almost where we opened. Now, just remember this green horizontal line is marking yesterday's high because of our analysis of what's happening on the day. So kind of ignore it for the purposes of this illustration. But you can see market went down, went up, so there is a trading range there. So if you hear and you say, well, okay, if the bulls break out of this, how far, if you're a bull, how far do you think the market will go? You've got to think measured moves again. The market is likely to go to a measured move. There's a higher probability of the market going to a measured move of the breakout out of that trading range. So when you come into the market, you have a look at this point, three bull candles getting to the top of that. We kind of nip over it, but there's no bull breakout for me at this stage. Yes, bullish strength, fantastic, but I want to see my breakout candle and follow through. That only came out here at this stage, breakout and follow through. Then at that stage, okay, I'm saying, well, I want to wait for a pullback to the moving average. If I get a pullback after a breakout to the moving average, then I will take the trade. So though we had a breakout and follow through, immediate follow pause, which could have been profit taken from down here, or bears trying to initiate a fail of this bullish move. But still, we're bulls buying into the close, followed by bull candle. So my mind is still thinking, okay, so I still have my bull breakout that's taken place here. I've got to wait for the pullback. Then I get three bear candles, and I get a pullback to the moving average. I didn't take that now. Why didn't I take that when there is a bull candle? You could take it if you want, put your stop in the legitimate place, which is way down here. But when I had a look at the three bear candles, and the last one preceding the reversal candle is a doji, I wanted just to have one more confirmation that the bears are not going to suddenly turn the market. At any given time, the market can turn. But if I can look at the market and look at the signs that are in front of me that are decreasing the probability of the market going in my direction, then I'd make sure I stay out of the market and just get that extra confirmation. And that extra confirmation came. So that extra confirmation came with this candle. So I didn't take that because of the structure here. But I had a second attempt to go through. So first attempt off the moving average, didn't take that. The second one, I said, well, I'm going to take that. And because I'm taking that as a second entry, I'll put my stop here. Okay, so I put my stop here. You could post your stop here to be more conservative. But because I've already had a higher low here, and another one here, but it's too tight for me to put my entry there, so I just go to the next level, and I took it there. I placed my stop there. So I got triggered in, and my whole thesis for the bull trend is still holding. I have a potential measured move here where that's an area that I got to look at to take my profits and see what the market is going to do. And at this stage, I'm still within the time frame that I'm trading, the first 2.5 hours of trading on the Tokyo Stock Exchange. I then have this bull candle, which is a breakout above this pullback to the moving average. Fantastic. And I get a follow through, bullish strength. I'm very happy with that. I get a bear candle, which could be in profit taking, or the bears trying to initiate the sale. So you've got to wait to see what happens with the next candle. But as it turned out, after the breakout and the pause, I had a decent bull setup here. Now, looking at this bull setup, I'm close to my potential measured move. I'm prepared to put a fraction of my risk, put the stop here, and take my profits out at this level, which I did. So I had decent profits here, and I had decent profits here as well, because my take profits, my stop was tight. So just short of 1-to-1. But That was a pretty, I was very happy with that particular entry. So I executed that and made and took the profits there. So we're going to have a look at just the euro for the day. But while we are here, let's have a look at what's happening currently on the day. So still on the day, nothing that is set up for us. Now, you could be looking, we finish if you trade in the 5-minute time frame, a lot of information that is provided for you by the market that you can always put on and off and just kind of see where things are going. So here there is a converging triangle of source that forming. You could put your descending level there, or you could go to the next law, and that's an outlier. Boost tried to break and they failed. So we definitely are in a breakout mode because it's a converging triangle. The market is not just going to end up like that all day. So at some point, there is going to be a breakout out of that. And if we do get a breakout again, I need a breakout candle, I need to see confirmation, I need to wait for my pullback. So we are in our waiting game. With this, a question you could ask yourself just to prep yourself is to say, okay, if we do get a breakout, how far can we go with this? So there is the nearest low of the session. There is the height of that converging triangle. Market could go and test. We wanted to test the high of yesterday. If we get the bears breaking beneath that, or again, we could want to test the low of yesterday. So at this moment, there is good opportunity to make money, provided we are just patient enough to wait for the breakout, patient enough to wait for the test and take the trades as they materialize before us. Okay, so then finally, let's have a look at the euro on the 18th of March and kind of see what's set up for us. Okay. So there was the euro setup on that particular day. And that is when I would have been in the market. So that particular stage, I'm looking at it and I'm saying, okay, we are going sideways, but we are also, while we're going sideways, creating, there's a double top that the market has created up to here. So that's a double top. I'm waiting to see if I can get a lower high to trade. So tight trading range, the next time that I get the bears showing strength is this candle here. So when that candle materialized, I was happy to put an order beneath that after the double top with that area high, but I was not triggered into the trade. So if I'm not triggered in the trade, I usually just wait one candle and then cancel the order. So at the next candle, so I wasn't triggered with that candle, so my order was beneath that bear candle. Let's just explain that a bit. So my order was beneath here, wasn't triggered on this. This did not become my entry candle. I wait one more candle in case I get acceleration in, and that also did not trigger. So I cancel that, and then I wait for the next opportunity. Next opportunity I had was not a perfect entry. It's a dodgy candle, but because of the double top of this setup and that setup, I was prepared to take the trade and just put my normal stop on and see if I get triggered in. I know that I'm I'm taking the trade beneath the moving average, but it's beneath the doji candle. So it's likely to be a pullback. So with that particular trade, I don't put my full risk on. I had my full risk on, which would have been 1% beneath here, which was not triggered. Had this been a decent bear candle as well, like we had here, I would have been very comfortable to put my full risk on. But I didn't do that. I put a fraction of the risk, 0.5% of the risk, anticipating some form of a pull because I'm selling beneath a doji candle. So we had a decent entry, which was a breakout beneath the moving average, breakout beneath that doji candle, breakout beneath this whole pattern. So very comfortable, very satisfied with that. Then I had a follow-through candle, but nothing to do and wait to see how far the market goes. Then I had a pullback, which could have been a failure. The market could have failed completely because of this doji entry, in which case I would have had to a succeeding bull candle closing above here. I would have had to get out, I would have had to take a loss on this trade and get out maybe before my stop got hit, or if it was a big candle, my stop would have been hit, which would have been fine. That's part of the probability, right? I spoke about probabilities last week, and what I said while we're looking at how I made the 3.6 profits here, and everything after the trades have manifested and we've taken them looks perfect, looks easy, but always remember probabilities. This pullback to the moving average is a 60-40 probability. It could be more, but for me, 60% of the times I win, and 40% I lose. So I know out of 10 trades, if I'm consistent in taking the trades as they come, out of that basket of 10 trades, I will have achieved my win for over 6 out of 10 of those trades, and 4 out of 10 I would lose. And that's fantastic on a piece of paper is my probability for my strategy that you can backtest. And I backtest it on the charts consistently, and I'm live in the market consistently. So I don't paper trade. I'm trading the market, but I look at the charts to see where the things will be. The one thing I do not know, of course, is the random distribution of those trades. So if I'm going to win 60%, when are they going to come? Are they going to be 6 in a row? Is it going to be 1, and then I lose 3, and then another 1, then I lose another 2? I don't know. I don't know if 40% are going to come in a row. So there is random distribution that you always need to take into mind. That's why we put a stop into the market. That's why we're okay to get stopped. That's why we need to know the risk parameters that we trade within. That's why we need to stick with them. In any case, so at the pullback, and we had a picture perfect test of the moving average, 2-bar reversal, decent signal candle. I mean, if this occurs in front of you, you just have to take a trade. Put your order beneath that, put your stop above. If you get stopped out, fantastic. But this kind of thing, you just have to take all day. Now, always move in the market, and the thing I got to deal with when I'm trading the Asian session, it's just in that unique slot of time that I've gotten out of bed and I'm fresh. My local time, 2 a.m. to 4:30 a.m. Then after that, I got to wind up things, go out, do the usual stuff that I've spoken about. So taking profits, I don't like to leave my trades on the 5-minute chart unmanaged. I like to manage my trades live. Because you could argue and say, okay, you've taken the trade, George, it's now 4:30 and you need to go. Why don't you just tighten your stop? Well, I could tighten my stop, and the technical level to which I would tighten my stop is about here. I could tighten that, and so if I get stopped out, it's a fraction of the risk. Let me see what happens. I could do that, and I come back, and I'm like, wow, look at what happened while I was gone, and all of this profits that you could do. It is perfectly acceptable. But just my own way of trading, my own personality, the way I enjoy my trade, and I like to manage my trades. Very rarely, I do it, but very, very rarely, 1 out of, I don't know, 20, 30 trades do I leave the market and just go away and say, I'm going to see what happens. And I can do that, but I like to manage my trade. So here, what I mean by manage my trade, well, I've got my measured move, the high of that, and high of that, and the low of that pullback. How far is market likely to go before it goes sideways? So I had my measured move here, and I was watching the market unfold. Go to the measured move, and as happens more often than not, at a measured move, there will be a pullback of sorts. It's not necessarily a reversal, unless it's one of the strategies that I trade, which are reversals at hidden levels of support. And those kind of strategies would have a measured move, which is a hidden level of support in this case. However, to see a breakout, a proper trend leg 1, pullback leg 2, which you spoke about last week, market getting to the micro double bottom reversal, and I could take that as a reversal trade. But most cases, the hidden support hidden support level, market will pull back, go sideways, go back to the moving average. So when I saw that, I wasn't surprised. I would have loved to see a continued breakout. Of course, it can happen, and maybe taking profits slow. So I saw that pullback, and I said, well, this is a measured move area, time to take profits, and which I did. So took profits here, and was out of the market. So that's the anatomy of the trade that I took last week in the Asian session, and how I made the profits at 3.65% profits in the session. And the point I'm trying to illustrate here is in any session. So I typically trade maybe that first part, the 2.5 hours of the Tokyo Stock Exchange, that first part of what I define as the Asian session. Of course, the Asian session starts before that, midnight. Things have to trickle in because of the 24/7 market, but that's how I define it. I like to trade those first 2.5 hours to see if I can collect some profit. Then typically I'm in the market at the start of the European session, and I'm looking at what's happened since I was gone. And I left the market 4 or 5 hours ago, trying to find what the market has done before we come into the session, and trying to find if I can get some early positions to take. And you take the positions, and the market moves in a direction. Fantastic. Market moves against you. That's also fantastic. Then I typically stay in the market through to the end of the London session, European session. At the end of that session, incorporate the first 2 hours of the US session, and that just gives a lot of move. And typically, as you're going into the open of the US session, the market again looking for the same thing. A trend from the open in the US session would then be a continual trend, most likely, or from the European session, or looking for reversals. So the patterns I look for on the open are the same. And in between, you gotta stay in the market and look for the opportunities and wait for these strategies to turn up, because when they do turn up, if you just trade them according to a strategy, you can make decent money on the day. So that's kind of my approach to each day. As it is now, this is the euro to the dollar. we kind of said if we break beneath this, we're going to get an opportunity to go short. I mean, look what we've had. I think we were talking while we were here. The three back candles bouncing off the moving average, dodgy the moving average. The bears were strong at that stage. The bears should have put a strong candle, not gone sideways. Bears came to the market. Tail, this was an attempt to break beneath his pullback to the moving average. Tail at the bottom, it's another strong breakout. A follow through, then immediately we have a pullback. Now, this is not convincingly bearish for me to look to trade because I don't have a pullback to the moving average. What I have is just continuation of sideways price action at this stage. Let me just do a rectangle to indicate what I'm talking about. So that for me is continuation of sideways price action. Okay, so how am I going to trade this? Well, here's what's interesting. If this is the market going sideways, if we break beneath this, how far are we likely to go? Well, we're only likely to go, to the low of the current session. In which case you might be creating a double bottom here, or if we break through, then there will be a pullback which we can trade. On the other hand, of course, you can kind of start to see these pictures in your mind. The bulls break, they want to test the open of the day, in which case then we still got to wait. Which whatever happens, there's no need to rush to jump into trades at this particular moment, because look at the measured move. Whichever way, you have at least a 30 pip measured move either way. You get a breakout and a test, 33 pip move. Same here that you have. So there is still potential to make a decent return, whether it's 1% or 2% out of that, if we just wait and allow things to unfold. With the cable where we are at the moment, we're having the three push pattern. Market went up, came back, went up, came back, went up. So it's a form of a wave, but it is holding above the 20 EMA. But again, there is nothing for us to trade here. Why is there nothing to trade? Because you got to ask yourself, always ask yourself, what have we broken out of? Okay. So there was a previous high there. The market tried to break out, failed. The bear candle pulled back. Okay. Again, there is another high. Try to break out, pull back, double top. So there is nothing for us to jump in and trade here. What we need is just a little bit more information. And what information, what would be our current bias at the moment is to look at a few things. We are beneath the low of yesterday. So if we are beneath the low of yesterday, it means the bears are the stronger force at the present moment in time. The bears are the stronger force at the moment in time. They are likely to continue to defend this. So the market has tried 3 times to get to that level. It has failed. The bears are strong now after this. They have to take a couple of successive bars, show us the close beneath the moving average, which would be absolutely fantastic, because now we know that the 3 attempts, we have a double top, we have a close beneath the moving average, then all we want is just a lower high. And if we get that, then that lower high will take the trade. And if you don't want to take that trade as a lower high, wait for a breakout and a pullback to the moving average, and you will get the trade opportunity coming up. Earlier on, we spoke about the market trying to get to a measured move here. So we gotta wait to see. Let's wait to see what happens. Are we gonna get a double bottom here, which if we get, absolutely beautiful, because now our mind switches to another strategy, which is a trading range strategy, which means we want to buy low with a double bottom, then we need a high low, and then we buy, and we see what happens. We get a breakout above the moving average. If so, then we hold our trades at the appropriate stop levels. So it's a bit of a waiting game. And when the moves come, they do come. We spoke earlier on about we were in here when we drew these lines, and we said this converging triangle is a breakout mode. And if we get a breakout in a converging triangle, the bias is towards the color of the candle. So that's a bull bias. So we had a breakout. So that's a breakout of that pattern. But look what happened. Why did the bulls not just give us even a small candle like that to confirm the breakout? In any case, it is still a bull candle. So the bulls did the absolute minimum that they could possibly do, but we would have wanted to see confirmation of that. In any case, we have a third bull candle coming up. So what you got to wait for here is wait and see what we get off the 10 moving average, see if we have an attempt to break beneath that and the reversal, a bull candle, which if we do, you take the trade. And if you take that trade, whatever it sets up, you need a 12, 15 pip stop. Your stop has to be down here somewhere. That's where you take a stop. But I want a test of the EMA. So whatever happens here, let it happen. Let's wait to get a test of the EMA. But that's one that's worth watching after this breakout, minimum effort by the bulls, follow through. Now let's wait for our pullback to the moving average. So guys, I don't see any questions in the chat box. But that's how we trade the 5 minute chart. There is many opportunities, and if you start to get in the flow of price action, things will slow down for you as they head towards your strategy. Just wait for your strategies, and the returns will be worthwhile. So guys, thank you very much. In the absence of any questions, I'm going to thank the admin team for hosting us, and I'm going to just head back. Thank you very much, guys. Appreciate it, and we'll catch up again same time next week.